Very excited to have you back, John, because a lot of people talk about buying low and selling high. You actually do it, you don't complain about it, and you just dive right in with conviction. So, really excited to hear about your thoughts on the current market.
Well, the current market, I mean, overall, I think is in a bear market rally. I have no interest in the 7 or 8 stocks that are making these new highs and the AI revolution. I've talked about that before on my own channel. I don't have any, it's outside of my scope of understanding. It kind of reminds me of the internet bubble back in 2000. I'm quite sure that AI will affect things greatly going forward, but does that mean that I want to buy Nvidia at $1 trillion market cap? I mean, that's would represent like 4% of the US's GDP. I mean, I don't. So I think there's a lot of froth in the market. I think we're in a bear market rally overall. Um, Last quarter, my model portfolio was down about 5% against the S&P being up. I think it was 7 or 8% in the quarter. Obviously, some of these NASDAQ stocks did well. But again, I really don't have any insight into that because I have no interest there. It's outside my circle of competence, as Buffett says. So I stick to my knitting, which is to look for deep value, look for situations, companies, countries, things like this that have been neglected or decimated, but yet have a potential catalyst for a change in sentiment, which can lead to a revaluation upwards. So I just stick to that. That's where I play. And I think that the other thing that I stick to my knitting on is, as small investors or retail investors, whatever, what have you, we have the big advantage over fund managers and a lot of these people that people see on TV. We don't have an investment committee that we have to report to. So we have the ability to be patient and wait. We don't have to beat the index every quarter or, suffer getting fired as a portfolio manager. So I stick to that. I'm sticking to that. And having done that, you're going to have quarters which are going to underperform. But I think the track record so far is since at least 2020, uh, beginning of 2020, kind of trounced the overall averages. We'll see if that continues.
Absolutely. So much wisdom in there. So you're investing in what you know and understand instead of just chasing the new hot thing. And then you are looking for stuff that's undervalued, buying low that has explosive upside. Whereas you're right, like you buy multi-baggers, you've had huge years, right? Because you rode out the bottom of a lot of markets. Whereas like Apple, like, can it 10x? Because then it would be worth the entire US GDP.
Well,
So
that's actually the thing that people forget. I mean, so depending, for somebody like Buffett who bought a large stake in it, well, he's bought. I mean, there's no doubt Apple has a tremendous brand. It may be one of the top, if not the top brand in the world. But you just pointed out mathematics matter, and
yeah.
how much can it grow going forward? And so it has a ton of cash. It buys a lot of stock back. When you're running a portfolio that has hundreds, tens, or hundreds of billions of dollars, you can't play in the areas that I play in. And because, buying some junior resource stock that is at an inflection will not be material to Berkshire Hathaway's performance. So they don't mess around with that. But I go back to what Buffett said. I don't, people think these are cliches, but these are actually wisdom. He said that one time. He said that if he was running a fund with just like a million or 2 million bucks, he said I could average 50% returns or more a year. And then he thought about it. He said, I think I could. Then he said, no, I know I could. And I believe that because you're able to have access to things that nobody on Wall Street cares about. There's no institutional support for, and it's such a small market cap that you can play. Now, that doesn't necessarily mean that everything that's undervalued or anything that's you still have to have a catalyst. You have to identify a catalyst and an inflection. But I mean, that's kind of, I think, the advantage that most people have. You said something very important because I just had published my weekly video, and a lot of people are upset. A lot of investors, younger people that don't have a lot of experience. Why isn't anything happening in uranium? Well, I would say something is happening in uranium. If you follow Cameco, it's one of the best performing stocks this year. The price of the commodity has been in a bull market for a couple of years. Now, what happens is people get on, watch videos, or they like somebody texted me and said, or DM'd me and said, well, I just got it. I just became aware of the uranium market. Well, where were you 4 or 5 years ago when you could have bought these things for pennies on the dollar? And the thesis was exactly the same as it is now. It's a lot better now. I mean, it's been crystallized. Everybody agrees that there's, upside, but a lot of the upside, a lot of the juice has already been taken limit. It doesn't mean that over the next 3 to 5 years or whatever that won't continue higher, but if you want to 10 bag stuff or have 100% gainers, which is not typical, you have to get in early and you have to sit. And there's an opportunity cost monetarily to that and to your psychology because people don't like to just sit and be bored. They want to do something. And with this thing now, it's so easy to go on here and be looking at stock prices all day and to make a trade on Robinhood or Ameritrade or whatever. People can't help themselves. So I think I don't want to get too far off track, but a lot of it's psychology. And what I tell people to do is write down your investment plan. What are you trying to achieve? What's your risk tolerance? And you have to look in the mirror and you have to kind of like know yourself a little bit. And I think you mentioned earlier, a lot of people just chase these shiny objects, whatever the theme is in the YouTube or the FinTwit space. Well, I heard somebody said this, so I'm going to go buy. Well, why are you buying? Did you write it down? Do you understand? Have you articulated for yourself a thesis? I don't see a lot of that sometimes. But anyway, that's kind of how I do things.
Exactly. And the mindset for that is like, if you're going to be like the last person to hear about it, like if it's on CNBC already and they're like covering it and talking about it, you're pretty much the last person to hear about it. And it doesn't work out to be kind of late to the game. But a lot of times, like if you are just chasing the new thing, well, you're late already. So that's why what you do is have the conviction to find stuff that everyone hates and it's super cheap. I guess do you like finding assets with charts that just look absolutely terrible? Like they're just banging along an all-time low? Like, do you love charts that look like that?
Yes, I mean I use stock charts for example, and you can put themes in there, like it'll do searches for you over all these stocks that are tracked under stockcharts.com. I mean, I do the paid service, but it's worth it. So I put in there like, what are the new 52-week highs today? What are the new 52-week lows? And so that's how I help identify like sectors that are like bombed out. I mean, I have no particular insight. I just looking at the 52-week lows, and over a period of a couple of weeks, I'm starting to see the same industry or same stocks. I'll go look at. I'll give you a perfect example. You were around about when the Bitcoin craze and the crypto craze was going on, and it got flushed. It inevitably had the pullback.
Yep.
Everybody disappeared. All the fair weather friends had disappeared. But what happened was there was a sector of Bitcoin miners, for example. They all got trashed. They went down 90, 95%. Some of them went out of business. Some of them didn't. Guess what? When something's down 90 or 95%, you should at least take a look at it. And a basket of those, you don't just pick individual ones over the last 6 or 8 months or a year. Some of those Bitcoin miners have appreciated 300 or 400%. How many people are talking about that? No one. So that's how I identify things. That doesn't mean everything that's down 90 or 90. Sometimes things should be down that, and they're never going to come back. I mean, if
Yeah.
you were invested in horse and buggy carriages when the Model T became popular, it wasn't going to come back. So you just have to, I think, like I said, you have to look at something. Okay, this gets my interest because it's down this much. Does it have some type of thesis? Does it have some sediment, something that can change the sediment that can create a revaluation or interest and draw money back into it? And that's kind of how I did it. I mean, example after example after example I could cite, but
Yeah.
that's really that's one tool that I use. But it's just a lot of reading. I mean, Charlie Munger said that he didn't know anybody that was successful that didn't read a lot. And I think taking in a lot of information and saying, okay, I mean, I can give some examples later on or whenever you want me to talk about what I'm interested in now. But you start looking for these things, and it'll just pop on your screen, or pop into your head, or you'll see somebody else that's smart. That's why I say people should really cultivate or curate a good bunch of people they're following on Twitter and FinTwit that have demonstrably shown that they know what they're talking about, and no one's that smart they can just generate every idea themselves. So that's
Right.
another tool people can use. But anyway, that's kind of the methodology that I use to find things. But I try to stick to those type of things, and then what I'll do is, okay, I don't understand a particular situation maybe on the Bitcoin miners, but then I went out and found people that did, and see if that's the same, viewpoint, or what if I'm missing something, or what have you. You know what I'm saying? So then you get a basket of these things, and then if it works, you can have market beating returns. And then again, you got a position size. So I don't go all in on everything. So
It's such a great point. I feel like people ran into trouble with this with uranium. It's like you could just buy like a beaten down ETF. It's diversified. It's a basket. If a third of them go bankrupt, that'll drag the ETF down, but the rest will kind of linger on until the next bull run. Instead of just like finding like the some of these miners, these explorers that like just ran out of capital pretty much. And so it's a great point by the ETF or buy a basket at least your own little ETF.
yeah, exactly.
Yeah, and also I like that you talk about market cap because it's true that the bigger the market cap, the more amount of money needs to flood in to move the asset. Whereas the smaller stuff, the less amount of money. That's how you get the multi-bagger in the smaller stuff, right?
Yeah, and what particular insight is you or I or the average person watching this video have into Apple that the 100 or 200 analysts from these
Right.
major shops don't have? I mean, I use the example back, like for retail analysts, they fly drones over Walmart and Target parking lots to try to gauge what the traffic is in the stores. We don't, I mean, you're dealing with people with PhDs and unlimited resources at these shops. So you have to find a space, you have to find a fishing hole where nobody else is.
Yep.
That's kind of the analogy, I guess, or metaphor, however you want to characterize it.
Absolutely. So now the most important question, what spaces are super unloved that you're looking at, that you're scoping out deep value in right now?
So I'm a big fan of somebody like Jeremy Grantham, who runs the GMO shop, and they do these forecasts of based on cyclically adjusted PE ratios and things like this. I'm not going to get into all the technical stuff, but suffice to say that they do these analysis. You can look it up on the internet's free, their chart that they put out. Um, they project 7-year returns, 7 to 10 year returns for various asset classes. And because of the overvaluation we've had in the U.S., not only in the equity market, but the bond market, U.S. equities and bonds are forecasted to have an overall negative return uh, over the next 7 years. The area that is undervalued, because I want to buy things that are undervalued, is emerging market equities. Okay. And so, for example, something that I think is that I haven't, one of the areas I'm interested in, for example, just for short term, and I'll give a long term, is currently there's getting ready to have an election in Argentina, for example. Okay. Uh, if I follow that because I had interests in like YPF, which is a big oil company down there that's developing the Vaca Muerta shale, and then the agricultural company Cressy, that it's a big agricultural company there. And so the country is a basket case. I'm not going to get into why. Everybody knows why. It's has a Peronist socialist type government, statist mentality on things, a lot of regulation, a lot of nonsense, currency devaluations, debt defaults. Why would anybody go near that? Well, they're getting ready to have an election, presidential election in October, but they have the primaries in next month, I think August 15th. And right now, the polling is showing that center right to right wing government is going to come into power. Pro market government is going to come into power. It's not set in stone, but that's the way it's looking. And so the last time we have precedent for this was in 2015, a pro market government came into place, and stocks there rallied about just the ETF, the Argentinian ETF was up 150%. And there were individual stocks that were up multi of that. So that's already moving, but it looks like because people are anticipating it's not as unknown, but I think most people aren't even thinking about something like that. They'll just say, you're nuts. I'm not going to go there, but that's how you do it. That's how I do it. Of course, you
Yeah.
don't go all in. You create a basket. I don't buy the ETF because the ETF has Colombian stocks in it and a lot of bank stocks. So there's there's probably 6 to 8 companies that trade on the NYSE. So you got the liquidity that are based in Argentina that do business. YPF's one. I mean, they're developing that Vaca Muerta shale. It's going to go from 600,000 to 1 million barrels a day. No one's paying attention to that company. It's up several hundred%. It's probably going to go higher. And so the thesis is if you get a market-friendly government there, then they will hopefully have enough people in the legislature that they'll drag in there with them that they'll be able to make some market reforms, and that will change the sentiment. It only needs to go from horrible to less horrible, and you can have a massive um, revaluation higher. So that's one right there. The other one I'm looking at is Brazil. If you look at Brazil, you're in a situation where I think that you're going to have a resource bull market over the next 10 years. That goes without saying because of the underinvestment, what's happening with developing markets, their need for energy and for materials to develop. Not only that, the whole ESG movement and the electrification, net zero, whatever you want to call it, prospects that Western democracies are pursuing. And so I catalog that week after week. For example, it just came out this week, a study from Wood Mackenzie that, current copper demand in the world's 25 million pounds per year, and it's forecasted by 2030 to be over 30 million pounds, and nobody can figure out how we're going to get, that 6 million pound per annual deficit solved. And in addition to that, you had Codelco, which is the largest, it's the state behemoth in Chile, which is the largest copper producer. Their production's down 17% year over year. So you're starting to, so when I look at Brazil has a huge amount of resources. If we're going into a resource bull market, and so say, well, that's terrific, John, but Brazil's always been that country that never performs. It always has the potential, but it doesn't perform. But I would suggest that, currently in Brazil, the central bank has rates at over 13%, and they've kind of had to battle inflation like a lot of countries. The inflation rate that's recently reported in Brazil is 3%. So you have positive real rates of over 10% Brazil. So what I'm trying to say is there's a potential for them to cut rates, the central bank to cut rates to stimulate.
Yeah.
This is in the context of what I already said, that you have a setup for a global resource bull market. If you look at a chart of Brazil long term, it's on the threshold of breaking out. You can go back in time. I'm not going to tell people what stocks to buy, but you can go back, like look at some of the financial stocks, for example. What happens the last time Brazil cut rates massively, what some of those stocks did. I mean,
Yeah.
this is no one's even talking about. I think the only person talking about Brazil is Tavi Costa from Crescat Capital, and he's from Brazil. I think that's the only reason. So there's a couple other people, but I think there's a setup there. When they start cutting rates, which inevitably liquidity will return, people will cut rates again around the world, and they have a lot of room to cut rates. And so I would suggest that would be positive for the equity market in Brazil. So those are things I'm looking at right now. I mean, I have things going right now that are working. They have inflected and working. That's, offshore oil and gas exploration, which I've been talking about for the last 2 years. And that's hitting on 16 cylinders. Is there still upside there? Yes. It's not the same as buying a lot of these stocks back when oil, the headline was negative $47 a barrel during the middle of the pandemic. And we had all these people running around claiming, see, we can get rid of oil, guys. We don't need oil. Well, we just set new records for worldwide demand. We're at, IEA and EIA and OPEC, all whether you want to, whichever one you want to list to, we're at 102, 103 million barrels of demand. So we don't have enough. We haven't invested enough. And so if you look at what's happening with a lot of the conference calls that are coming out in the forward guidance from a lot of these companies, whether they're drillers, whether they're equipment manufacturers for undersea equipment. I mean, it's all booming. There's tremendous investment coming to the industry after it had a lot of attrition due to the basically the depression that industry went through. So that is working. So again, with uranium, I mean, that's another thing that I'm positive on. And but again, I mean, when somebody says to me, "Well, I don't know what's happening," well, what do you own? If you own crap goes that are issuing stock to keep the lights on,
Yeah.
I mean,
Yeah.
unless we have that big move higher, like if uranium it needs to step change from whatever 55 a pound or whatever and go to 70 or 80, then you'll see those stocks move. But I mean, it's just look at Cameco. I mean, listen to Grant Isaac said that this is the best that he's seen in the industry in 30 years that he's been at Cameco. I mean, you can either believe Grant Isaac or not. I mean, so
Right.
what are you investing in? You know, there's a difference between investing in a company like Cameco that has cash flow and earnings, or Kazatomprom that has cash flow and earnings, and Crapco that selling visions of sugar plums and has no revenue and no prospects for revenue. You saw what happened in Niger this last week with the coup, and there was a couple of companies that got wrecked their share prices. You
Yeah.
know, that's part of speculation. That's not investing. That's not going to happen in Canada. There's not going to be a coup in Canada, and the MacArthur River thing that Cameco, that's all going to hit, just keep doing what it's doing. So, but people don't want to invest in Cameco because, well, it might only go up, it might only double from here during the, well, okay, that's fine. They want the company, like said in my video today, they want the company that goes from 10 cents to $10 so they can buy 10,000 shares and become a millionaire. Somebody will do that, but most people won't.
Yeah, exactly. But there's a huge crowd trying to do that. And I guess the question is, I guess the thesis is there's such a supply demand imbalance in uranium that there's going to be a supply crunch, which is going to cause the price to go up and cause these little miners to ultimately multi X, especially maybe when the liquidity environment improves and people actually start investing again. Is that possible for a lot of these juniors?
That's exactly what I think will happen. I mean, but there there's the rub. When does that happen?
Right. Yeah, yeah. You need discipline. Like
Yeah,
mental.
so I don't know when that's going to happen. It's impossible to know. It will happen, more than likely if these things usually end up in blow off tops where it sucks all the become the shiny object again. But what's going to be the catalyst for that to happen? Is the U.S. government going to ban Russian imports of nuclear fuel? Is a mine, the last time it happened, it was, I think, MacArthur River flooded was one of the catalysts for the last push above to 130 or 140. I don't know what the catalyst will be, but what we do know is week after week after week, the tailwinds continue to get better. They just turned on another reactor in Japan this week that went critical, that's been offline since Fukushima. So this trickle of good news continues to happen. So, but I said this again. There was a paper out of Germany this week that said that 67% of the German population is still positive towards nuclear power. I've predicted the Germans will turn their reactors back on inevitably. They have no either that or they can be poor. And I don't think once people have convenience and have had wealth, they don't want to become poor. And that's what So
You hope not.
I can make these cases. Maybe they do. Maybe they think that they can put solar panels on the shore of the Baltic Sea and that will work for them in winter when the sun comes up at 9:30 in the morning and goes down at 3:30 in the afternoon. Maybe that'll work out for them. I don't know.
Well, it's amazing how people vote. Like you can have complete chaos in your city streets and people will keep voting in the same government in the United States. I don't get it. I mean, in Argentina, what if the right side of the politics don't win? Like then people are still voting for the same like
Well, then
chaos.
you have to sell
Yeah.
that thesis is then no longer
Right.
in place. But you're right. There's probably 30 to 40% of the people there that are net beneficiaries of government largesse, and so will continue to vote for the Peronist. Uh, you know that's what it is. I mean, that's the definition of stupidity in my mind. And people think when I define stupidity, I'm being used as a pejorative. Are you calling me stupid? No. What I'm saying is there's a lot of people have an inability to connect cause and effect. So something's happening, but they don't understand effect. Like when all the people that are moving to California and running up the prices in the hill country in Austin, they bring their they came here because they don't want to live in California anymore for all the reasons that everybody knows. And then they come here and they bring their politics here. So that's
Yeah.
what stupidity is. That's why when you go to Austin, it's a very left-wing city, and they have a lot of the same problems there that you have in some of these other cities in California. Okay, we don't have those issues down here in South Texas, even though it's predominantly Democratic voting, but not progressive. Okay, you come down here and steal out of a CVS, they're not even somebody. Just a guy is going to grab you at the clerk's. I mean, you're just not going to do that down here. Okay, you're not going to act up out here. It's kind of like just how it is. So it's kind of still old school like that. Now, a lot of people say, well, they we can get into the politics, but you're right. I mean, that's what, if that doesn't happen, like I suggested, and if the parliament isn't sufficiently also staffed in Argentina with people that reject the progressive agenda and are more market oriented, then the thesis will probably not work out. But then that's why you just say you're wrong and you move on. Okay, I was wrong, sell, but that's position size, and I don't have all of my wealth in that idea. So,
Exactly. So you're diversified across many sectors that are all beaten down at the same time, essentially. Is
well,
that
not at the same time. They may be at different. It's like planting. It's like planting a garden, right? And you might plant your tomatoes. You might plant some beans early. They start to, and then you put another set of beans. So you're just planting, and then you're harvesting at different times as these theses hopefully play out over time.
right?
That's
Right.
that's about how I would say it. Yeah. And I'm constantly looking for something, but I'm not in a hurry. Like I said, I have a lot of cash. I'm in a lot of cash right now, but I'm not in a big hurry to because I still think that there's going to be lower prices. Like I'm bullish on copper, but I just have a list of copper miners. I don't own any copper miners right now because I think that we still have this recessionary period to go through, which I think will create further bargains. So.
Gotcha. That's super helpful to know. Okay, so then yeah, but then the reason there's a lot of commodity investors is because they look at the supply demand fundamentals, the projection, regardless of how people vote, no matter what people say about oil, people need it. And so that's why you're investing in certain spaces like that. So do you see, I guess, the outlook for oil? Like, do you see a structural supply demand crunch in that space based on the politics around it still?
Well, my underlying thesis there is that we're in a secular bull market. So secular means multi-year. So I think that by the end of this, sometime, but in the next 3 to 5 years, you're going to see all-time highs for for the oil price
Wow.
and inflation adjusted. So that would be $200 a barrel. That sounds provocative to make a statement like that, but there's no reason why, over that period of this decade of this resource bull market, which is attributable to, again, oil. There was an excellent, I'm not the only one to say this, but other people have said this. Oil basically allows civilization. People don't understand this. The reason we use oil is not because we have greedy oil companies and people want to get rich off oil and destroy the environment. It's because it's the best type of fuel that we've discovered for transportation, for example, and for all the derivative products that come from petrochemicals that are hydrocarbon based. And people don't understand that. And I'm not going to debate that with people anymore because if the United States and Western Europe don't want to use oil, that demand will be sucked up by Asia and the global South. It's just that simple. I mean, I've done this spreadsheet exercise before, and you have 1 billion people. That's going to be 2.5 billion people in Africa, for example, by 2050. They use less than a barrel per person of oil a year. The average person, like in the United States, uses 20 some odd barrels of oil per year. If you just want to go like in China and India, like Indians probably per capita use like 1.5 barrels or 2 barrels of oil per year. So if you just want to take them to the level of, say, the Japanese or South Koreans, which are around 12 or 13, then you just plug the population in and plug in and these people are now going through their S curves. And don't forget about Bangladesh with 200 million people, Pakistan with 200 million people, Indonesia with 300 million people. They're all on their S curves. They're all demanding oil. They will continue to use oil. If the United States and Western Europe don't want to use oil, those other places will, because that's how you increase wealth. In order to increase wealth, it's not even arguable. You need more and more energy inputs to allow for that. And so the reason why we have a modern society and why we have the conveniences we have is because we use cheap, ubiquitous forms of energy. And if we don't do that, then our standard of living will suffer. Just take a look at Germany, take a look at California. These places are doing other things. They have some of the highest cost energy costs. The gasoline price, what's the gas price in California right now?
$5 a gallon.
Yeah, it's 313 here in Texas. So uh, if you're, that's mostly government regulation, California. And that's fine. If people want to live in an environment like that and they endorse those views and they think they're doing something, that's their choice. But there's a cost to that.
Exactly. That does lead perfectly into uranium when we're talking about like a low cost, dense energy. But just going back to oil, it's just so interesting. Isn't it going to cost a fortune to phase out oil? I mean, they're talking about building all this renewable infrastructure, even uranium infrastructure. But the reality is, these countries are all super indebted. Like the United States is just going to create like $1 trillion brand new green industry with printed money. Like, yeah, I don't see how all this like huge infrastructure happens when you look at the crumbling infrastructure we already have. It's just interesting when people think we can just move away from oil.
I have a certain view of the West that's not shared by most people, and that shapes some of my thinking around my investments, where I
Yeah.
want to live, things like that. The West is in decline. It's This is not anything new throughout history. This isn't unique to the United States or Western Europe. A lot of people don't want to hear that or talk about that. I don't think it's really indicative of a first world country that purports to be the bastion of wealth and freedom and liberty. Go to Anaheim, go to downtown LA, go to San Francisco, go to Philadelphia, the Kensington district. I tell people there's a guy that has a show, forget his name now, and he goes city to city and shows all this stuff. Is that good and normal? Do people think that that's, indicative of a first world country? You said it yourself, infrastructure crumbling, okay? Always on the verge of talking about blackouts, talking about what's the plan. We have a dearth of leadership. We have people that are wedded to I don't even want to get into it because start getting into politics and this gets people riled up because people have biases.
Yeah,
But
yeah,
the results are the results.
yeah.
Where else would you want to live? Somebody that would say something like that has not been anywhere around the world. Depending on what you personally want and you find important for yourself, there are better places than the US. You can go to some of these countries and live, and as a visitor, you will not be treated like the people that live there. You are somebody that is a visitor there. You have money. You're treated differently than the local population. Now, you may not have the same internet high speed. You may have to deal with certain issues or whatever. What's important to each person, you know, it gives you, there's an example. A friend of mine runs the Uzbekistan Fund for Asia Frontier. It's a fund that invests in Uzbekistan. He's lived in Tashkent for 3 or 4 years. They didn't have a lot of COVID lockdowns. They actually economy grew through the pandemic. It's booming there. And, he's been able, for how he wants to live, he's lived in Asia for 10 years. You have a lot of people that want to go to Turkey, for example, and do things. You can buy a certain level of real estate in Turkey and get Turkish citizenship. I mean, I'm getting off track here, but everybody just goes, yeah, America, F yeah, like in that puppet movie. I mean, that's somebody that probably hasn't been anywhere that would
Yeah.
say something like that. There's even places in the US that have better. Why not sell? I know a guy that sold his house now I'm not saying most people would do this, but he sold a house in LA like a year or two ago, $1.5 million, whatever it was, nice house. He had family and connections in Lincoln, Nebraska. He moved there and he bought a couple of apartment buildings. He lives in one of the apartments and he basically doesn't have to work. He just tends to his thing and does his thing. So there's always, you know what I'm saying? There's always disparities and things like that.
Yeah.
It doesn't matter, the US, to my mind, you have this coastal elite that really benefits, and that's what we look at. Everybody wants to go to the major cities, but they're crap holes, in my opinion. I mean, that's not for me, but some people think it's great. They like all the access to the restaurants and the cultural things, and they just step over the bums and the hypodermic needles and pretend it's not there. I guess they're okay with it. I'm not okay with that. So it doesn't matter what I think personally about these things or what you or anybody else watching this thinks. The demand for oil is going to continue to go up, regardless of what anybody, Gavin Newsom or Olaf Scholz does or whatever. And if people want to become more poor and standard of living go down for the middle class, they again, it's a stupidity. They can't seem to attach the cause and effect to the decisions and the way and the people that they put into these policy making positions. A perfect example, I chuckled, is in New York City. They brought a bunch of migrants into this neighborhood. Okay, governors from Texas and Florida shipping them up to New York City to make a point, and the people in that area are all complaining now. We want these people out of here. They're beating us. There all kinds of weird, bad stuff's happening. But it's a district that voted 93% for Joe Biden. These are the policies they voted for. This is the problem. People do not associate cause and effect.
Yeah,
So,
exactly.
I mean, it doesn't matter what the US and the EU do about oil. Oil demand is going higher for decades. That's it. Because the population centers, uh, there's 400 million people in the EU, and which won't exist in 10 years, by the way. And there's 330 million people in the US. Then you can count Canada and ASNAC countries. Who cares? There's 4 or 5 billion people that are in their S curve of resource demand. It's just a spreadsheet exercise. What level of per capita oil consumption? You're going to run the Indian economy off solar panels and wind? How? These are math. How many quadrillion BTUs does it take to run a modern economy like the US's? Then it's like, where do you get the BTUs? Because KWs and all that can be converted. And how much do they cost per? That's the conversation.
Exactly. And who has the trillions of dollars to create that brand new infrastructure? And so this leads into nuclear power, which the US government's now endorsing, ESG is now endorsing. Do you see that being an actual nuclear renaissance in that space, which could eventually eat away at oil? But do you see this big new infrastructure there?
Yeah, I mean, it's happening. For example, just down here, there's a big chemical complex between Houston and Corpus, uh, Point Pleasant, I think, or Chocolate Bayou. Anyways, Dow has a big facility there, and they've already contracted and are going to plan on building, I think, a half dozen SMRs there later this decade. And so, what will they do? They'll be able to replace the gas turbine Hercigs that they have that create the heat, steam, and heat for their process, chemical process. So they'll replace it with these SMRs. They will create electricity. They will create heat energy that they will use in those chemical processes, and then those gas turbines will go away. So yeah, I mean, but it's going to take decades. Energy transitions take decades, and you can't do it in a 4-year election cycle. That's what the problem is. We're trying to shove 20 pounds in a 5-pound bag based on politics instead of, you know, what previous. And the interesting thing is, if you look at like Javon's paradox, just because you increase nuclear, the others, when you have an energy transition from animal dung to wood, from wood to coal to petroleum to nuclear, the previous levels of consumption don't go away for those other forms of energy.
Wow. Oh, yeah, yeah, because populations keep growing. You're talking
Yeah,
about
and you need increasing amounts of those K BTUs inserted into the world economy to grow the world economy.
right. And full scale SMR deployment is, like you said, a decade at least
Oh
away.
yeah, at least.
So there you go. That makes so much sense. Okay, great. So do you still believe there's a structural supply crunch in uranium, and that's just going to lift the floor price of the actual commodity over time?
Yeah, and if you look at like, I mean, I'm not the biggest expert on this. You look at guys like Mike Alkin, and these guys have, spent 10,000, 20,000 hours analyzing every reactor's needs, every um, mine, every proposed mine, every they know they visit all the conferences. I mean, I'm just a generalist investor, but it's obvious just looking at the public information that's out there that, the fuel needs for the utilities have not been fulfilled. And so it's going to be akin to my mind, like musical chairs. Eventually, the music's going to stop. It's going to go off in people's head. We have to scramble to get these pounds. I mean, the Chinese, for example, when they make a commitment to like nuclear power, like they've done, and they're building all these reactors, they're going to make sure they have a 10-year supply of uranium, so they don't end up in a situation like the U.S. is in, where 20% of the U.S.'s electricity comes from nuclear power, and we produce no uranium, or virtually none in this country. So we have no, our ability to do the various processing stages to get it from yellow cake to usable fuel in a reactor. We don't have that in the U.S. And so we rely on countries like Russia and these other ones, and that's not a good place to be. And so the Chinese and the Indians, these people, energy security, they're going to ensure that they have it. So you're going to have, so what happens, like, for example, in Niger with these two, I'm not going to mention the companies, everybody knows who they are. I don't know what way that government's going to go. I saw a lot of people waving Russian flags in the streets of the capital. Okay. I know Wagner's on their way down there. The French are out. Those mines are going to get developed. Is that material going to go to France? Because France used to get a lot of their uranium from Niger. Is that going to now go to Russia and China? See, this is a lot of that's 4 or 5% of the world's supply right there. So eventually this is going to inflect at some catalyst is going to come about, and it's just going to be like when MacArthur River flooded, and then everybody's going to go, the music's going to stop, and people are going to realize there's not enough chairs for everyone. And then the price is going to, I mean, you hear somebody like Harris Kupperman, he'll tell you that he thinks, why not go to a couple $100 a pound or a couple $1,000 a pound? Now, I think that's, I don't like being hyperbolic like that, but I think it's going to make a new all-time inflation adjusted high. The last high was $130 a pound during the last bull market. It'll probably go to 150, 200 on a spike. Who knows? I
Yeah,
don't know when or if it will do that.
and the fundamentals now are better than they were in the last
Yeah,
bull.
and they continue to get better.
Yeah, it's so interesting to talk about bifurcation, the whole BRICS alliance now forming in the Middle East, Russia, India. I wonder if they will shore up their own uranium supplies and the West is left with Cameco, essentially. Will be interesting.
Yeah.
Yeah.
I don't see a lot of activity, the U.S. doing what you go to any place in Africa or Central or South America, you see Chinese everywhere doing things. I don't see any Americans down there doing anything. Anyway,
Absolutely. No, that was amazing. Thank you. We got your take on copper, uranium, emerging markets, oil. Couldn't have asked for more. You have a service called Actionable Intelligence Alerts. And so if you want to tell people a little bit about that and where people can go to find you, that'd be amazing.
yeah, I mean, I write a newsletter. Basically, I'd put out a weekly video just talking in generalities, what I'm thinking about, what's, in the news around some of these themes that we've talked about. And then, what I offer is a subscription service. If people are interested on specific ideas of how to maybe take advantage of these, then they can subscribe to my newsletter. It's not hard to find. Go on the YouTube channel and everything's in the show notes. I also have a free email that goes out every week. People can subscribe to that, talks about specific, issues. Once in a while, I'll throw a name out there that's, but to get the real, ones ideas that have a lot of possible, asymmetry, then those are in the newsletter. And it's mostly for people that have the same view, that are looking for, something that's going to inflect over 3 to 5 years. It's not a trading thing. It's, it's for people that understand these things take time to develop. And so far, we've had pretty good success with it.